Hello everybody and welcome to this week's Motor Trade Radio podcast, brought to you in association with eBay Motors Group. It is Saturday the 18th of September and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 48, season 7 of Motor Trade Radio, bringing you all the chatter that matters. And once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
So we've got not many shout outs, but what we have got is an exclusive interview this week with Louise Wallace, who is kindly talking us through some of the results of the latest NFDA Dealer Attitude Survey, which was publicised this week. So it's sort of hot off the press, talking through some of the results and what's happened in the network, and it's a fascinating interview, isn't it?
It is, yes, and inevitably there's winners and losers, and it's also the first survey since the end of lockdown restrictions, so that is sort of factored into some of the responses, especially around the level of support that OEMs have given dealers during the pandemic. So do stay tuned for that.
Definitely. So do you want to talk through some of the headlines? Because there's been a few biggies this week, and I don't know when we're going to stop talking about one of them, but yeah, hopefully soon.
We'll be returning to an ongoing story, but headlines this week: buyers return to pre-pandemic willingness to travel to showrooms. Kazoo acquires SMH Fleet Solutions for £70 million. Cinch rebuffs far-fetched Motor Point acquisition rumours. Cambria Automobile's management buyout goes through. BMW and Daimler pledge to keep prices high when chip crisis ends. China to consolidate overcrowded electric vehicle industry, but there's a new electric car company coming to the UK from China.
Yeah, so we better get into the first story of this week, and this is in Motor Trade News. So welcome back with a headline there, Motor Trade News from Chris Wright there. So buyers return to pre-pandemic willingness to travel to showroom, and this is from a survey that our friends at Judge Services did, and Neil Adley, who we've had on the podcast several times, and he's due back on, Neil. So if you are listening, please do get in touch. You are due back on at some point to share some of this. But an interesting survey here that talks around this return to the showrooms and that consumers are wanting to visit showrooms.
Yeah, there's some great stats here, and I did work with the Judge Service guys on this story and the release that went out. So they new research that they did shows that 80% of buyers are prepared to travel up to 29 miles to visit a dealership, and that compares with just 19 miles back in 2017. Similarly, 90% of dealer customers used to come from within 33 miles, but now they come from 50 miles. So this survey, which is the Judge Service Industry Report, September 2021, also identifies a correlation between the distance customers are prepared to travel and their use of the internet to search for cars. So what we're seeing is this sort of coming together of, the way consumers are actually looking at buying cars, and it is suggested here in this research that that willingness to travel and to travel distances to buy the car that they want to buy is coming back.
Yeah, and he does. Neil's nice little quote here from Neil Adley, who's, as I say, managing director of Judge Services, and he said that we can see that the car buying habits are beginning to return to pre-pandemic norms, and this allows dealers to take the upper hand over the likes of online-only retailers such as Kazoo and Cinch. So the view there is that that Kazoo and Cinch have had maybe the upper hand through the pandemic, when consumers haven't been accessing the physical showroom environment, but now that They are wanting to travel, as the stats do indicate there, and they're willing to travel a reasonable distance as well to buy the right car. That actually those physical entities of the dealer network will pay off.
Yeah, and it does really show the power of that face-to-face interaction, visiting a dealership, testing a car, and sitting down and discussing price. And also interestingly, they look at the use of the internet as part of that car buying journey. So before the pandemic, in that was tracking at 56% in January 2020. So the level of research that those doing research online, 56% January 2020. During the pandemic, that peaked at 65% in April 2021. But as restrictions were lifted, this dropped back to 57% in July 2021, suggesting that these potential buyers are actually going out to their local dealers and further afield to actually look at the vehicles in the metal.
Yeah, and we have got a couple of stories about EV this week, but we did talk about the Arnold Clark EV Centre that they've recently launched up in Scotland there, and Neil does make a point in the story around this, attracting consumers or customers to their showrooms to take part in test drives and offer a safe personal interaction, as you just referred to there, Curtis. But now that we're moving into this non-combustion area of hybrids and plug-in hybrids and electric vehicles, that actually there's a need to have that face-to-face interaction. And not everything can be done on the internet, and sometimes the customers do want to drive one of these different types of fuel vehicles and understand what it does for them and how it operates.
Yeah, and the takeaway is very much along the lines of when you are planning your digital marketing, you need to cast that net wider than maybe you did before.
Yeah, definitely. So as the next story, we're heading over to AM for both these stories, and the first one, very hot off the headlines that we covered only last week now, Curtis.
Yes, yeah. It seems a long time ago, doesn't it?
Yeah. So Kazoo acquires SMH Fleet Solutions for 70 million. So this is again very quick off the back of floated and going flotation of their business in the New York Stock Exchange, then very quickly following that up with the acquisition of Kazoo, and now the acquisition of SMH for a tune of 70 million to strengthen their vehicle services support network within their refurbishment and logistic operations.
Yeah, and it's probably just worth adding that the Kazoo acquisition, which we reported last week, that was worth £25 million, and the flotation had a valuation of £6 billion. So there's lots happening from Kazoo. SMH, they were established in 2003, has a team of over 500 staff, and they currently process more than 70,000 vehicles from 6 vehicle preparation sites, including Bedford, Gloucester, Throckmorton, Worcester and St Helens, and SMH carries out over 150,000 vehicle movements per year. So this is all about taking that side of the business in-house so that Kazoo is less reliant on third parties, and it seems to have the money to do so at the moment, and that's why it's making these acquisitions.
Yeah, I mean, if you look at it from a sort of a growth perspective, is moving very quickly. So yes. He's made commitments in terms of their growth plan, the speed of that growth plan. That would have been clear when he was getting his investment, and obviously made clear when he went on the stock exchange around what his plans were, the speed and the volume of that plan grow. So I suspect he is starting to tick many of the boxes now that he's committed to be able to do what he's committed to for his investors. And obviously from the shareholders now as they move forward. So, very, very quickly moving through it.
Yeah, and they do say once the business is fully integrated, Kazoo will have the capacity to recondition and deliver hundreds of thousands of cars per year and store tens of thousands of cars. So it's just showing the ambition and the scale there. And this does tie in neatly with our next story, which is also from AM Online. And the headline is Cinch rebuffs far-fetched Motorpoint acquisition rumours. Always good to get far-fetched into a headline. So hats off to AM Online there. And this story broke midweek, and this is a response to some of the rumours that were kicking around in the earlier part of the week. So AM have actually spoken to Cinch and got their side of the story. So Constellation Automotive, who owned Cinch, along with BCA and We Buy Any Car, have denied these rumours that it is lining up an approach to acquire the listed car supermarket giant Motorpoint. So we first saw the reports, as I say, in Car Dealer midweek, and the rumours suggested that an acquisition was being considered, but AM have spoken to Cinch, and they've said the rumours circulating about Cinch and Motorpoint are far-fetched and completely unfounded.
Yes, well, we'll keep a
yeah,
we'll definitely keep a close eye on this one, because I think reality, any deals, whether it is Cinch and Motorpoint, of anything of that magnitude, it's not these rumours don't tend to get out. It tends to be very, very protected, very confidential if there is any conversations taking place. So I think we'll obviously keep a close eye on what's happening. You can understand where possibly the rumours have come from and why. But as you say there, that Cinch have clearly rebuffed that rumour as being untrue. We'll definitely keep an eye on this one.
You're listening to All the Chatter That Matters on Motor Trade Radio, brought to you in association with eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed. And now, over to our interview with Louise Wallace. Well, welcome back to the Motor Trade Radio podcast, Louise, and for joining us to discuss the newly published summer NFDA Dealer Attitude Survey. This is, of course, the twice-yearly barometer polling the views of franchise dealers on the car and van brands they represent. So welcome back, Louise.
Thank you for having me back. It's a pleasure to come and talk about the Dealer Attitude Survey.
No, and it's a good one. So they say it's great to have you back on again, Louise. It feels like it's been a long time, but I think it's probably about 6 months now. But I think the way the last 18 months have been going, things do seem to be a long time. But welcome back. So, in terms of the survey, then, so this is the summer 2021 survey, and this was conducted in July of this year, so it's the first since the lifting of the lockdown restrictions in April. And with this in mind, how did dealers rate the level of support they received from their OEM partners during the pandemic?
We were very, very pleasantly surprised. I suppose it reinforced what we already had been getting feedback from dealers, but they did feel as if they had actually been well supported generally by the manufacturers during the last 12 months. And it was good to see that has happened, and that we had actually an increase in scores, particularly in questions around support, but also in the overall score for the survey this time. So, a good survey for us, I think.
And the all-important headline question is, how do you rate your manufacturer partner on a scale of 1 to 10? So can you tell us about some of the winners and some of the losers, and also any significant movers in the ratings this time around, Louise?
Yes. So it was very comforting to see that actually the scores had moved up. a reasonable amount since the last survey. So overall, we had 6.3 points for across all networks, which had risen from 6 at the last survey and 5.9 from the survey before. So not necessarily huge rises, but a nice general steady rise, which would suggest that things for dealers had improved with the manufacturers over the last 6 and 12 months. Of course, there are differences within that. Some manufacturers, networks did a lot better than others. And we actually saw a good movement from Alfa Romeo, who increased their points quite a lot. They might still be nearer the bottom, but they did improve their point score incredibly. We also saw some go the other way. I mean, Skoda was the largest faller across the board, even though that still leaves them reasonably well seated in the table. At the top of the table, as we've seen on a number of occasions in the past, Lexus and then Toyota were both in the top 2 places, giving incredibly good scores across the board. I mean, not quite perfect, but Lexus's score at 9.7 out of 10 is an incredible score for a network. Also, alongside Toyota with a score over 10 was Kia as well. So that, again, a manufacturer network that generally performs well in the survey and would suggest that their relationship with their dealer network is very, very strong. We do, unfortunately, have a few who do come in much, much lower at the bottom with points beneath 4, which would suggest that there are some frictions within the networks that are down there. Though I have to say, virtually every network has improved this time, so there is some improvement. So even though Hyundai is bottom of the table with a Bath and Fiat, there was some positive movement there too.
And I suppose just before we move on a little bit there, that I think these are, they will need to do some significant changes, won't they, to sort of move that barometer heavily. I mean, you might see some tweaks and you'll see some small improvements, but for people like Fiat, Hyundai and Abarth to come from sort of those sub 4 up to the sort of 5, 6 and 7s, they need to do some significant sort of work, wouldn't they, I suspect?
Yeah, I mean, it's a challenge, and we have seen manufacturers manage to increase scores over the years and improve immensely, but it does mean a manufacturer needs to build a strong partnership with its network. It's also important, as we will see from other questions, that the manufacturer gets the margins right for the vehicles and the investment figures right, because at the end of the day, it is very much predicated on how financially viable a network is as to how strongly the scores are. Now, there's more to a relationship than just money, but it's a very important part of that relationship.
Yeah, and that sort of brings me on to the next question, really, around that. Once again, as you mentioned there, a good survey performance for Lexus, who had the highest overall average across all the questions, and I think that's for the 5th consecutive edition of the survey. So, I mean, you've just mentioned there about return on investment, profitability. What makes Lexus so popular amongst its network?
I think it has managed to build a very strong relationship with its dealer network. It does work closely with its dealer network. And I think there is a good return on profitability and the investment levels are right. And all of those things come together to get the relationship right.
And how does that, I mean, in terms of that, in terms of the scores overall for Lexus, I mean, they have done reasonably well across all the barometers within the survey, haven't they?
Yes, so if you actually do, as we do with it, and gather together all the scores for all the questions, they actually sit at the top of the pile on that measure. And in fact, their average for all of the questions is over 9, which is an incredible score. And importantly, again, a lot of those questions are the ones that I think dealers see very important to them, which is around the return on investment and the money they're making.
And certainly, Louise, for as long as I can remember, because I've been writing about the survey for quite a few years, it always seems to be Lexus, Kia, Toyota. They're up in the top 3 or the top 5.
Yes, and we do see a few others that will sit up there. Also, Mercedes has generally done very well over the years as well. But yes, for some reason, they do seem to have a good handle on the relationship and do manage to work well with the dealers, who look at them in a very positive light and give them very good scores when they come to doing the report twice a year. And it's consistent. It's not just a one-off that those brands are at the top. They have done it survey after survey for a number of years, and probably in the case of Lexus, they've been the top for about 5 surveys. They have been towards the top for many years before that.
Yeah, and drilling down into some of the detail, what did the survey reveal in terms of margins on new and used cars, and how satisfied dealers were with those margin levels?
It's quite an interesting question in the context of the supply issues we've been having with new and used cars, and also the increasing in prices of used cars. Yes, the scores for those questions went up considerably. Most networks have a very positive view at the moment on the margins on both new and used cars, and I suspect that may well continue for the foreseeable future.
And any comparison with 6 months ago in terms of how satisfied they are now with those margins compared with back in March?
Yeah, a number of networks have certainly since March, and also since this time last year, have increased those scores quite substantially. And that's obviously as we have had, the manufacturers have been bringing the supply through as quickly as they can, but of course not in the numbers that we've had in the past. I think dealers have seen far better margins, and are therefore able to report that they are more satisfied with the margins than they have been for some time.
And just following on from that, I mean, in terms of that overall return on investment and current and future profit potential, how are they feeling at the minute? How do they see that compared to where they were 6 months ago? Now we're coming, we're out at the end of the pandemic, but now they're faced with other challenges going forward.
Yeah, I mean, on the pure question about investment levels, generally, there's been a positive shift in that. I mean, that I think will be helped by the margins. If you're making more money, you're happier to invest more. So that's been a really good sign that's come out of this side of the pandemic. And there does seem to be a lot more confidence in being able to invest in the networks, even though there might be some challenges on the horizon.
And finally, Louise, turning to future directions, how satisfied are dealers with the brand's alternative fuel offerings? And we're really now talking about battery electric vehicles and plug-in hybrid electric vehicles.
Yeah, I mean, overall, the score for the question has improved, and improved quite considerably. I mean, in the last half year, it was 5.6 score level, and it's now increased in this survey up to 6.2. So there's been quite a nice rise, and obviously more confidence in what is coming through in terms of vehicles for the future. There have been some ups and downs in there, and interestingly, again, though, Toyota, there's a slightly different mix in top scoring franchises. Kia sits very highly in that score, but interestingly, you've got MG in there, which doesn't score so well in other questions, but has scored incredibly well on that particular question. But it would suggest that dealers generally are feeling more confident and more satisfied in what the manufacturers are supplying to them. Having said that, there are a few franchises at the bottom of where there is some significance and dissatisfaction, where you've got scores beneath 4. We have down at the bottom above Alfa Romeo, Mitsubishi and Fiat at the moment, but that may change as time goes on.
Yeah, and you singled out MG. I mean, they've done particularly well because they scored 9.3, so they're in second place. And I guess it's indicative of the lineup, what products they've got in showrooms at the moment, and the ones that are due to come on stream over the next few months. So MG dealers must be feeling particularly satisfied at the moment.
Yeah, and their overall score has actually climbed a reasonable amount as well. So if you add all the scores together, they have increased that score, partly probably on the basis of that particular question and what's going to happen in the future.
Yeah.
And I mean, just before we finally get the details of where people can find the copy of the survey and let you get on with this weekend's NAMA AGM. In terms of the working relationship, because this is all about the OEMs working with you and the NFDA to understand the survey and obviously getting the most from it and making sure that they're engaging with the survey and the dealers. I mean, is there any advice for anybody from an OEM perspective that could be listening this morning to the podcast that you should give?
I think the important one that we always say is that, one reason we do the survey is not just to sort of beat people up, but also to encourage engagement with the networks, that the OEMs engage with their dealers and help build a partnership going forward. And that it is obvious from the results we get in questions that the manufacturers that do well in the survey are the ones that we know engage well with their dealer networks.
Yeah, I couldn't agree. I think it's like you say, we said right at the start there, Lexus, as you say, it's fifth year, but they've always been at the top. They've always worked well. They've always engaged with the survey, as many of the others have done throughout the years. And I think from my experience working with yourself and sort of interviewing on the podcast, I think you do see a change when the OEMs do work with you on the survey on a regular basis.
I mean, the interesting thing is we are getting a lot more engagement in doing the survey from OEMs, and it's very obvious that OEMs are interested in the results of the survey and more to the point, the outcome, and are keen to work with us and with their networks to try and use the survey to improve the relationship.
Yeah. Well, it only remains me to say, Louise, well, thanks again for joining us on the podcast and sharing your insight with us, as usual. In terms of the listeners, can you tell the listeners how they can get hold of a copy of the survey?
Yeah, there's two options. One is that you go on our website and can download it, or you can ask us directly for a copy by emailing on myself or Lena at the RMI.
Brilliant. Well, thanks again for joining us, and hopefully it's not too soon before you do come back on the podcast, because you are always welcome. The door's always open, but I'm sure you'll be back on when we get the results of the winter survey, and you can talk us through some of the results of that.
Yeah, of course, it'll be a pleasure. Thank you.
Thanks, Louise.
So great, as I said right at the start of the show, great interview there with Louise, and thank you for coming on, Louise. But it is clear, these interesting operators at the top of that survey are continue to sort of switch around, and I think you made that point, didn't you, Curtis? That they do tend to dominate that sort of top 3 or 4 and have done for some time, and you get those at the bottom end that do struggle to move significantly away from that bottom number.
Yeah, absolutely right. Lexus, Kia, and Toyota are pretty much untouchable, and their dealers are very, very satisfied at the moment, as the results across the board really show in this particular survey.
No, you're right, and I think some good advice there from Louise at the end, which they do, those good franchises or OEMs do work very closely, one with the network but also with the NFDA on the survey to make sure that they do engage with their network when it comes to the time of the survey, that they do get the dealer network completing the survey and sending it in. So it is a bit of a collaboration between all three, really, between the NFDA, the OEM and the dealer network to get those kind of results. And I think you made the point, Curtis, that they do read it. The OEMs do read the results and do use them in some of their PR in terms of where they're performing with their dealer network.
Some years ago, when I used to go to the Frankfurt Motor Show every other year, it coincided with the launch of the NFDA survey, and I would sit down with CEOs to do an interview, and it was obvious that the first email they'd looked at that morning was the NFDA survey and where they were in the rankings, and that they knew where they were and where the competition were. So it is widely read within the OEM sector.
Definitely. So heading over to car dealer now, and this is on the latest from Cambria Automobiles, as you quite rightly said, and Cambria Automobiles shareholders agree Mark Lavery's $82.5 million management buyout. So this is without doubt been a long time coming, with the challenges faced there and the deferments that it's had for some time now. So again, this is now over the line. There's probably a lot to do, and I'm sure Mark and his team have got a significant level of work to do before it's finally done. I think, is it the end of the month? I think, Curtis?
Yeah, I think offers remain open until the 28th of September. But in terms of the timeline, I think we're likely to see shares being cancelled by the second week of October, and Cambria coming off the London Stock Exchange AIM listing. So this is a story that we've been following since early in the year, isn't it?
Yes.
And there's been so many updates on this, and it looks as though it is over the line. So congratulations to Mark Lavery and the team there. There must be a huge sense of relief there at Cambria Automobiles.
Yeah, and as you say there, it's over the line because Lavery led the Bidco win 76.01% of the shares, so that just takes it over that benchmark number that they were required to push this through, and that the 85 million cash offer to take the company private is declared unconditional as to the acceptances. So they can, I think, force this through now as an acquisition and an MBO that they've been trying to get through, which just needed to get that last little push, I think, to get the final shares over the line. So again, very good friend of the podcast is Mark, and as you say, Curtis, we have been watching this one very closely. So I think there's probably a lot to come from this. Once it's done,
Yes.
Mark's done everything, and he's probably got a busy period ahead of him, and then obviously he can start to think what he's going to do next.
Yeah, he thought the last few months were busy, but there's obviously a lot to do now, and it'd be fascinating to see where he takes the business now that it'll come off the stock exchange, and there'll be more management control there.
Definitely. Now, as we've been talking quite a bit recently through the pandemic, and we've been talking about the shortage of new and used cars in terms of that profitability and what's happening, and interestingly, there's a story brought this week on the Financial Times, and then subsequently through other media, that BMW and Daimler pledged to keep prices high when chips crisis ends. So this is talking about that they've seen the potential margin opportunity when supply is tight, and that they can work on a very sort of an increased lead time, but work on profitable margins for their new vehicles.
Yeah, it's a good story from Joe Miller, and this would have been generated at the recent Munich Motor Show, which is actually the first one of its type, because that's now replaced the old Frankfurt Motor Show. So I would suggest that Joe Miller sat down with senior bosses from Mercedes and BMW, both of whom are quoted in this piece. And you're right, this is really around the chip shortage, where dealers of both brands have not needed to discount their vehicles because supply and demand, they haven't got the supply, they've got huge demand, they haven't needed to discount. And this is actually putting certainly the premium brands, and I suspect some of the other brands, in a very strong position now in terms of future pricing, because once you don't need to discount, you're in a position of strength, and that need to discount starts to be removed. And there's a fascinating quote in this from one of the analysts who suggests that a 1 percentage point decrease in the average discount would release $20 billion worth of extra profits for car manufacturers, and that's taking into account discounts in Europe and the US. So that's a sobering stat, isn't it? Now, why would they want to discount if they don't need to?
Well, yeah, we'll see what happens when we get some kind of normality at the end of all this, and where they sit in terms of market share, because we know these boys when it comes to market share, whether that's BMW, Daimler, Mercedes,
Yes.
or your VAG brands, all do, particularly in the UK, all do fight for that 6, 7, 8% market share, and who's number one. So again, hopefully it is, because I think what is clear, and we've covered a few of them now on the podcast, that the dealer groups have certainly benefited as well from the supply shortages and being able to make money out of their new and used cars more than they've ever been able to do before. So, many of them have seen a return to profitability for new cars rather than chasing volume. So hopefully it is a new precedent set, and that we'll start to see that actually it isn't necessarily about volume, that these guys do look at it in terms of profitability.
And you touch on an interesting point there, because it's possibly somewhere where we haven't actually been before, where dealers, they've got this huge demand and they haven't needed to discount. So, where do we go from here once we return to normality? I mean, it's just going to be fascinating to see how this plays out.
Hopefully not what they're talking about in China at the minute. So we're heading over to Reuters now, and the story that's been covered in a couple of places, that China to consolidate overcrowded electric vehicle industry. And that's a quote from the minister over there in China, that they are talking that they have too many electric vehicle makers, and that the government will encourage consolidation. And the Industry and Information Technology Minister Zhao King, I've got no chance of pronouncing that one correctly, Curtis. But
I think you were spot on there, Phil. Well
yeah,
done.
you were leading me into that one. I know what you're like, Curtis. You get very quiet with that one.
Yeah.
But I think this is, it is an interesting one, this one, isn't it? Because it's not, again, I've read a couple of stories this week. I think me and you talked about it on the EV forum this week, which, by the way, was a fantastic hour spent on the an hour and a half, actually, wasn't it? On the EV forum, and it probably could have gone for another hour. But somebody talked about the Telegraph story, talking about charging and recovery of taxation of electric vehicles, and the feeling was we don't need any bad news around electric vehicles at the minute.
Yes.
Whereas we've got this now in China, that they're now talking about we have too many makers of electric vehicles.
Yeah, and the fascinating aspect of this story is that it's come from the Chinese government. The Chinese government have realised there's too many domestic EV producers competing with each other. So Automotive News Europe did a follow-up story on this, suggesting that need for consolidation is happening right now, and some of the smaller manufacturers will be encouraged by the Chinese government to start merging.
Yeah, and you've got things like NIO. We've seen them start to expand very heavily. You've got Sepang that they have, and BYD. Which is another one of the leading Chinese operators there. That they've been talking about expanding their manufacturing capacity over in China. So maybe we will see some dominant players of those Chinese manufacturing take place, and as you say, some of the smaller operators start to fall by the wayside now as they move forward.
Yeah, and disproving that last story totally is our last story this week, which is from This Is Money, and it's written by Ray Massey, and it's the new electric car maker coming to the UK. And this is China's Great Wall Motors Aura brand, which is certainly a new brand to me. I'm not aware of them. Great Wall,
Yes.
many listeners will recall them from probably 5 or 6 years ago that they were last on sale in the UK, but they were distributed by International Motors, and they came to market with a pickup, a large pickup, a sort of budget price pickup, and disappeared fairly quickly, it must be said. But this is a brand new brand under Great Wall Motors called Aura.
Yeah, and as you say there, it's going to be an interesting one, isn't it? Because there is a significant level of investment now in EVs, not necessarily by new brands, but current brands as well. And we were talking before the podcast there that some figures just to put in terms of context around the growth of the electric vehicle sector. Toyota have announced that they're going to be spending nearly 14 billion on battery development and EVs by 2030. Hyundai have now announced its Genesis models will all be electric by 2030, and that they're planning to spend 12.8 billion over the next 5 years. Hyundai, like Toyota, are focused on heavily into hydrogen as well. So Toyota have been talking a lot about hydrogen as their future model. And Porsche have been quoted this week around their Taycan Porsche that is doing extremely well, and I think it's above expectations in terms of the demand for that vehicle. And I mean, that's an $83,000 vehicle.
Yes.
They've sold 20,000 already, and they've got a 6-month waiting list on those vehicles. So there's a lot happening from all the manufacturers now around EV and EV investment and EV development. So again, it's going to be very interesting, and these are moving very quickly, aren't they, Curtis? It's not long term.
Yes, and with Aura, there's no indication in the story as to how the vehicles will be sold in the UK, whether there'll be a network or if there'll be direct online sales, but prices are expected to be around £25,000 to £30,000 when order books open at the end of the year, and that's for delivery in mid-2022. So not far off.
No, and it is muted that it is Europe as well. So they are entering with EVs, and the plug-in hybrids are going to be following the path of, as we've talked about before, with Sepang, Neo and BYD. So it sounds like these are going to be some of the very dominant new entrances to the EV sector, alongside the brands that we already know that do operate in that marketplace.
Yeah.
So, busy week with headlines again there, Curtis. Lots going on. It's never a dull story, is it, with acquisitions and things like that. I think there's been a few announcements on profitability as well this week by some of the remaining AM100 operators that have continued to report reasonable results for the first half of the year, and fairly positive about the future. And I think there's a lot going on.
Yeah, definitely. And we're only midway through the plate change month. And incidentally, I have seen some new plates on the road. So they are getting out there. I know you're not getting out much, Phil, but they are out there.
Is that why you're on the road driving, or was this when you were on one of your runs?
On one of my runs, yes. Yeah. Oh, and a big shout out for me because I'm running a half marathon tomorrow.
Oh, is it tomorrow?
It is tomorrow, yes.
Oh, good luck with that. Yeah, good luck with that. At least it's only a half marathon this time. I remember many years ago when you did the full London marathon, and but I'm sure it doesn't feel as hard.
No, I did swear never again, and at my advanced years, a half marathon is more than enough challenge for me at the moment.
No, good luck with that, and
thank you very much.
So that's it for this week, Curtis. Busy week.
Yeah, that's all for now. You've been listening to the weekly Motor Trade Radio podcast, brought to you in association with eBay Motors Group. Thanks for joining us for all the chatter that matters. We're back next weekend with our take on what's happening in the car retailing sector. Until then, it's goodbye from me.
And it's goodbye from him.